So after once you have login, click on the courses. There you can see course list. And in this course list you can see wide range of courses. Click on play course. If you have not purchased, you can see only 3 demo videos. After purchasing, you can see number of videos which are given here. And you can click on that video and you can click on play button. And video will start playing and you can
Hi friends, my name is Sarvan Kumar. I am your economic.
Hi guys, my name is Sarvan Kumar. I am your economy faculty. Welcome to Rathods IAS Economic Weekly Series. As usual, even this week we do have a lot of economic current affairs which appeared in different newspapers. So without wasting any time, let us look at the first topic. See, the first one that we are going to discuss in this class is all about the GST, Goods and Services Tax. See, the news goes in such a way. There has been a remarkable upswing in GST collections in recent months. Collections touched a record high of rupees 1.67 lakh crores in the month of April. Right? By the month of April. See, when we look at these kind of a current affairs, first we should pose a question that whether we know the GST properly or not. Whether we understood the definition and the working of the GST properly or not. Guys, you need to remember when you observe the prelims of UPSC 2022, you might have already realized that understanding and having a clear-cut knowledge with respect to different economic concepts is very much important to address the questions. Just open your 2022 prelims question paper and just look at the economic questions. Not only the economy, polity. All these days, the UPSC requires you to have a good subjectual knowledge. You should have a good clear-cut understanding of the concepts, right? So, we should see, in the earlier days, just we have the current affairs, and if we read the budget and the economic analysis, like for example, like this economic survey and the budget and the rest of the current affairs, mostly it would be sufficed, mostly it would be enough to address the questions in the UPSC. But these days this is not the trend. They are asking you, they are expecting you to have a good subject clarity. So that's the reason, as I always promise in our economic classes, that not only the current affairs that is going to be taught for you, but it is also the concept which also comes along with the current affairs in the Rathods IAS. So without wasting any time, let me give a basic concepts with respect to how the GST is going to work and what this GST is all about, and rest of the technical details that you have in all these slides which you can read all alone by yourself. But as far as the topic is concerned, I am going to explain it to you very clearly. So let's begin. Now, as I always say in my previous classes, that in order to understand a concept in the economy, you always rely upon a good example, right? Good example is going to make you understand the concepts very well, particularly in the economy. So, in the same way, we are going to take an example and I am going to make you understand how the GST is going to work or working in the country. As you know, already GST is working. So, we are going to understand how GST is going to go, is GST is working in the country, right? So, see, whenever you heard about GST, everybody knows the meaning and everybody can expand the GST these days. It's nothing but goods and services taxes, and I don't need to write it here. But what I need to write here is GST is nothing but a single VAT for the whole country. A single VAT for the whole country. Of course, some may dispute with me that, of course, there are different kinds of taxes, particularly the indirect taxes, which are not still amalgamated into the GST, such as, see, still we have the customs duty, which is not integrated into the IGST. On the import and export of the goods at the international borders, along with the IGST, still the customs duty is levied upon them. So, it is altogether a different debate that like GST is single tax for a whole country or not. But as far as this broad view of the GST is concerned, the GST is considered as a single VAT for the whole country. So the first point in this class you need to remember is the working of the GST. That is, a GST is a single VAT for the whole country. Now let us try to, everybody knows the meaning, like already you have heard about the meaning of VAT. Can somebody try to expand it? VAT means value added tax. VAT means value added tax. There is a tax called value added tax, and the way in which value added tax works in the country is the same way in which the GST is currently working in the country. right? See, now with an example, let us try to understand how this VAT or GST is going to be working in particularly in the country. See, now let us try to understand this working of the GST with the example of a book. Imagine this is a book manufacturing company. Imagine this is a book manufacturing company. Now automatically, what is the output of this particular manufacturing company? Definitely it is going to be the book, isn't it or not? See, it is going to be the book. The book is nothing but the output of that particular company. Now see, you go to a particular milk products manufacturing company. Now what are their outputs? Definitely the milk products, right? So similarly, for a car manufacturing company, their output is nothing but a car. For an apparel manufacturing company, their output would be apparels. So similarly, for a book manufacturing company, their output would be the books, right? It is as simple as that. Now imagine he is the owner of that particular company and he is saying that the output value of particular company is 100 rupees. He is saying that the output value of my company is 100 rupees. What is his output? His output is nothing but the book. So automatically the value of the book at the factory is 100 rupees. Right? The value of the book at the factory is 100 rupees. See, the book value at the factory is equal to 100 rupees. Right? Now, in order to manufacture that book, he needs paper, and in order to run that machinery, right, he needs electricity. In order to manufacture that book, of course he needs some intermediates. Of course he needs some inputs, right? So he needs paper and he also needs electricity. Imagine he have purchased paper at 30 rupees and also understand he purchased this electricity at 20 rupees. Now we call these two as inputs. The manufacturer have taken the inputs paper and electricity, which is worth of 30 rupees and 20 rupees respectively, and made it to an output which is valued at 100 rupees. So what's the value of input here? The value of input is 50 rupees. What's the value of output? Value of the output is equal to 100. Now you can clearly understand. Now the simple formula is value added is equal to output minus intermediate consumption. So output is 100 rupees and intermediate consumption is 50. See, output of the book is, the value of the output is 100 rupees and the intermediate consumption is paper plus electricity 50 rupees. So the value added is equal to 50. Now observe my words, observe my sentences guys, observe my sentences very clearly here. Now try to understand. The manufacturer have taken inputs worth of 50 rupees. The manufacturer have taken inputs worth of 50 rupees and added a value of 50 to it and made it to 100. He took a inputs worth of 50 rupees and added a value of 50 to it and made it to 100. Now comes the main question, how he added a value of 50. Right? How he added a value of 50. So value added by the manufacturer to the inputs that he have taken is equal to 50 rupees. See, now how he added a value? See, in order to run the machinery and in order to manufacture that book, he needs employees, right? For the employees, he needs to pay salary. Now technically we call it as compensation to employees. Now let us consider he paying just about 10 rupees for each employee on a book he manufacturing. Next important component of the value added is, see, consumption of fixed capital. Now what is a fixed capital? Fixed capital is nothing but buildings and machinery. You know that machinery might go wear and tear after 10 years period of time. Imagine myself as the same book manufacturer. Now I am thinking that my manufacturing unit, the machinery that currently I am using is going to get wear and tear and it is going to get expired after a period of time. Say for example, it is going to get expired after 10 years. Now what I am going to do is I am going to collect a certain amount on each and every product so that I will accumulate some money after a period of time so that I will replace that particular machinery after a period of time. Say for example, let us consider an example. Imagine after 10 years, the price of that particular book manufacturing machinery is 10 lakh. Now what I am going to do is, I am going to collect 10 rupees on each book, I sell, and 10 rupees on each book, so that after 10 years of period of time, I am going to have 10 lakhs so that I can replace the machinery. I hope you understood it. So in such a way, he is collecting 10 rupees on consumption of fixed capital. Next we have the operating surplus, and we have mixed income. Operating surplus or mixed income. To put it in a layman language, guys, it is nothing but profits. See, as a manufacturer, he is manufacturing the book. For the book he manufactured, he needs some profit, right? So that profit is nothing but the operating surplus or mixed income. Say guys, if the book manufacturing company is incorporated, that is, if the company is registered and he is eligible to have some contracts like with respect to the borrowings and repayments, now the profits added by such companies is called operating surplus. Now there are some household businesses, you know that household businesses also manufactures or produces the books, and if they add a profit to the book they have manufactured, we call it as a mixed income. I hope, see, in case of unincorporated companies which are not registered companies, if they add a profit, we call it as a mixed income, and if in case of incorporated companies, registered companies, if they add a profit, it is called operating surplus. Imagine that money is about 20 rupees. Next, see, the last important component is production taxes. Production taxes. Now understand, in order to establish that manufacturing company, he need to take license from the government, right, for which he need to pay. In order to register that land and machinery, like particular building, he need to pay stamp duty. In order to make the laborers work in his manufacturing company, he need to pay the labor license. In such a way, he is going to pay different kinds of taxes to the government, and we call the taxes as production taxes. So consider he is paying a production taxes of 10 rupees to the government overall. Now what is the total? See, what is the total value here we get? The total value that we get here is about 50, 10, 10, 20, 20, 20, 40, and 40 plus 10, 50. So in such a way, so ultimately the value added of 50 by the manufacturer is happened in such a way. I hope it is very clearly understood by you how the manufacturer have added a value of 50 to it. So to put it simply, a book manufacturer took an inputs worth of 50 and added a value of 50 to it in such a way, and ultimately made the output to 100 rupees. I think so far it is very clear for you. Now let us try to understand. Guys. Now imagine this book is brought to a book wholesale shop. This book is brought to a shop here. Now understand, guys. Now let us try to understand the meaning of VAT. Now the name itself is suggesting it's a tax on value added. So it's a tax on value added. Imagine, say for example, if he is the ultimate consumer, if he wants to purchase that book, now at what price he is going to purchase? Say for example, imagine the VAT on the book is 10%. The VAT on the book is 10%. So ultimately the price, the value of the book is 100 rupees and the VAT on it is 10%. So the VAT on it is 10%. Guys, you have to be very careful here. Now when we are talking about the VAT of 10%, do you think that 10% is going to be imposed on 100 rupees? No, it is not 10% of 100 rupees, the whole value of the book, but it is 10% of 50 rupees only, because the value added, how much we have added a value to the inputs we have taken, we just added a value of 50 rupees. So the value added tax means nothing but it's a tax on value added. Our value added amount is 50 rupees. So it is 10% of the 50 rupees value added. What is 10% of 50? It is nothing but 5 rupees. So ultimately the book is sold at 105 rupees to the consumer. 105 rupees to the consumer. Now I hope you clearly understood how the VAT is working in the country. Now just consider this 10% VAT as 10%. Now just consider this 10% VAT as 10% GST. Right? You all know that GST is a dual tax like CGST and SGST. It's a CGST and SGST. See, CGST might be 5%, SGST might be 5%. It means 2.5 rupees, it means 2.5 rupees. So totally 5 rupees. So you will pay, again you will pay, for 100 rupees you are going to pay 5 rupees as a GST. So in such a way, the way in which the VAT method is working once in the country, the GST is also working in a similar way in the country right now. So the VAT is collected on the value added, GST is also collected on the value added. right? So that's the reason why we broadly say the GST is considered as a single VAT for the whole country. It is considered as a single VAT for the whole country. Guys, I hope you clearly understood how the VAT is working. See, our book came into the slab of 10%. There are other slabs where the goods are charged in the GST regime, like 0% slab, 5% slab, 8%, 12%, 28, 18%, like 28% slabs. In such a way, 5, 12, 18 and 28, 0. In such a slabs, the goods are being taxed in the country. So our book came under the slab of 10%. Like say for example, cereals, pulses, hulls, all these comes under the 0% slab. Right? School books, water bottles, all this comes under the 5% slab. Computers, like some books, tables comes under this 12%. Soaps, luxury items, edible oils, hair oils comes under this. Refrigerators, ACs and some luxury items comes under the 28% slab rate. Which means the way in which the tax is being collected on the book, 10%. Similarly, on the refrigerator, the tax is collected 28%. On some edible oils, the tax is collected as 18%. So, I hope you clearly understood how the GST is currently working in the country. Guys, let me remind you once again. UPSC, right? See, UPSC these days is expecting these kind of a knowledge from you. UPSC is expecting these kind of a knowledge from the aspirants these days. Just observe the UPSC question paper of 2022. UPSC is testing these kind of basic knowledge from you. Without having these kind of a basic conceptual clarity, particularly in the economy, not only in the economy, each and every subject, you cannot answer the questions right now. That's what I said. In the earlier days, it might be the economic survey, it might be the budget, and with the basic current affairs, you might address, for example, the UPSC is asking 20 questions in the prelims, and you might attempt 15 questions out of it with these things. Right? Now, these are not the questions UPSC asking. UPSC is just testing the basics from you. UPSC wants you to have a clear-cut knowledge, conceptual clarity. So this is how you get the conceptual clarity with respect to the topics. Guys, if possible, try to maintain a notebook and try to note all these concepts that we explain in the economic weekly series. Guys, in a similar way, we in the Rathods IAS, just me the person who have taught all these economic concepts clearly. We have completed the part 1, which is completely dedicated to macroeconomic concepts in the same way, and we have the part 2 in which I have completed particularly the Indian economy. I have divided the economy into 2, the macroeconomic concepts, which is particularly important for prelims as well as mains, and in the Indian economy it is also important for prelims as well as mains. I have divided the macroeconomic concepts and Indian economy so that you can divide, you can bifurcate, and you can clearly understand all these concepts. These concepts comes from the macroeconomic concepts for part 1. Guys, in a similar way, you should have conceptual clarity with respect to each and every topic so that it would be a very easy task for you to answer the prelims questions as well as mains questions. So this is about the current affairs. So this is about the basics topic. I hope I clearly given you about how the GST works, what is the VAT and how the GST is going to work in the country. I hope the things are very clear. See, in such a way the GST is working, and here you have the points. Just you go through the points, like it is popularly known as a single VAT for the whole country. Now you know why the GST is considered as a single VAT for the whole country. GST is, right, during its origin is going to have all the benefits. It is to be collected on the VAT method. When we look at the future, it is to be collected on the VAT method. And you know what is the meaning of VAT. VAT means value added tax. You also know the meaning of value added. Now you also know how the value is addition, how the value is added to a particular inputs taken by a manufacturer. Now the same way in which the VAT is working, it is going to be the GST is going to be working in the same way, because you can see the feature here that it is to be collected on a same method like VAT is working in the states. Now when we look at the legislative basis, guys, these are like very important for your prelims. See, GST is introduced as 122nd Constitutional Amendment Bill, but it is passed as 101 Constitutional Amendment Act. The UPSC aspirants often get confused in this. See, the government of India, like in parliament, there are various bills proposed to amend the constitution. In the same way, the 122nd constitutional amendment bill was introduced, and it is about GST. But all those bills which were introduced in the parliament need not to be proved, need not to be get assent. So that's the reason it was passed as 101 Constitutional Amendment Act. So as far as this GST is concerned, it is 101 Act and 122nd Constitutional Amendment Bill. UPSC might trick you that it is 122nd Constitutional Amendment Act in such a way. So you should be very careful here. Right? Now, when we look at the main features, the GST is a value-added tax levied on most goods and services for the domestic consumption in the country. It is paid by the consumers and it is collected by the shopkeepers and it is returned to the government. Right? But you have to be very careful here. See, GST had subsumed almost all indirect taxes. It has subsumed almost all indirect taxes except alcoholic, liquor for the human consumption, and 5 petroleum on the petroleum products. Currently the GST is not being imposed, and the rest of the alcohol based consumption products also GST is not currently being imposed. See guys, GST is simple guys, you can clearly understand it in a simple way. See, we have central excise duty. Central excise duty is nothing but it's a tax imposed on the production of goods and services. It's a tax imposed on the production of goods and services by the central government. Now, majorly this is the one which is converted into the CGST. Now we have central, service tax. Like we have central sales tax. Like in such a way it is converted to the IGST. And you have the state VAT. We have the sales tax. We have octroi, entry tax, luxury tax. All these indirect taxes were first converted into the state VAT. First these are amalgamated and converted into the state VAT, and then it is converted into the SGST. So we have SGST, we have CGST, we have IGST. In such a way the GST came into forefront. I hope it is very clear for you. And here just you pause the video and just go through all those different indirect taxes which are subsumed into the central government GST, right? And we have the state government taxes as like state VAT. We have the state VAT, central sales tax, we have the luxury tax, entry tax, purchase tax, toll tax. In such a way we have different kinds of state indirect taxes which are amalgamated into the SGST. These are the central government's indirect taxes which are amalgamated into the CGST. In such a way we have the dual GST in the country. Now when we look at the implementation of the GST before and after, before we have the important different charges like service charge. In this class itself we are going to have a topic on the service charge itself. And next, in such a way the VAT 12.5%, VAT 12.5%. Now it is simple, like GST 9%, CGST 9%. It goes in a simple way. Like you can observe this bills itself, but by observing this itself you can clearly understand the difference between both the taxation of the goods before GST as well as after GST, right? So when we look at the rest of the features of the GST, it is applicable on the supply side. GST is applicable on the supply side of the goods and services against the old method of production of goods, right? Or on the sale of goods or the services. This is one important feature. It is a destination based taxation. What does it mean? Say for example, if a good is manufactured in the state of Tamil Nadu, it is being transported to the state of Haryana. Now earlier what used to happen is, in whatever the state the good might be consumed, the taxes might be going to the state of Tamil Nadu. Now in the GST regime, what is going to happen? If that good is particularly consumed in the state of Haryana, the tax amount will be given to the state of Haryana. See for example, imagine from the Tamil Nadu it is being consumed in the state of Haryana. Now the IGST is imposed on it. IGST is nothing but CGST plus SGST. So the GST component will be retained by the central government and the SGST component will be given to the state of Haryana. So that's the reason why it is called destination based taxation. It's a dual tax. As I said, it is going to have CGST and SGST, right? Now the GST rates are mutually decided upon by the GST Council. See which good need to be placed in which tax slab. Like we have the 8% slab and we have the 12% slab. Now in such a way, which good need to be placed in which tax slab is clearly discussed and clearly mentioned by the GST. It will be decided by the GST Council with the due consultation by the central government as well as the state governments. Now as I said, we have the multiple tax rates like 5%, 12, 18% and 28%. Just for the example, we have taken the slab rate of 10% for the book. Right. Now this is about the concept, guys. As I promised in the beginning of the classes, like in the Rathods IAS, we are not only going to teach you the current affairs, but it is also that basic static that is important to understand the concept will be dealt to you. And for the rest of the concept, just please do visit the website where you can find the sample classes, and if you like it, and you can subscribe it, and you can have the conceptual clarity with respect to the rest of the topics. Now, when we look at the reasons for increased collection, see why this increase in the collection of GSTs happened. See, first, a sharp rise in the inflation has played a significant role, and higher imports. A part of overall increase in the collections can be traced to the higher imports, like in the tax buoyancy. All these concepts are like statics. We have discussed about the tax buoyancy in the static syllabuses very clearly. Just please do visit the classes, right? Next, changing the structure of economy, tight rules by the GST Council, all these helped in the increased collection of the GSTs these days, right? I hope it is very clear. So this is all about, so in this topic, you have clearly understood, guys, you have clearly understood like what is GST, what is goods and services tax, its working, its features, right, and also the current affair. In such a way, you should cover each and every topic, not only in the economy, with respect to polity and with respect to the rest of the subjects. So you should be very thorough, very good with the static, as well as you should be very good enough with the current affairs, right? Now let us see the next topic. The next topic that we are going to discuss is the system of rice intensification, intensification technique, SIRI. See guys, this particularly comes from the GS paper 3, particularly the economy. Particularly we have the agriculture, it's a very important topic. Like in the macroeconomic concepts, we have the money market. In a similar way, in the Indian economy, we have a major topic called agriculture. See, this is often comes in the mains question. It is also often asked in the prelims. Like what are the advantages of the SIRI technique? See, in this diagram, in this image, you can clearly understand the advantages. See, healthy early crop establishments, healthy soils like with organic matter, reduced competition between the plants like moist soil. See, more grains for the fertilizer, larger heavier grains in the SIRI intensification technique. So more tillers per plants, increased and bigger hills. So in such a way, all these are the important advantages of the SIRI technique. Like now when we look at the background, SIRI was first developed in the Madagascar in the year 1980s, and since then several countries in the world have been practicing it. It promises to save 15 to 20% of the groundwater and improves rice productivity. Like these are the important points for your mains, guys. You should be very thorough with respect to these mains. Experts said that it gives equal or more produce than the conventional rice cultivation with less water, less seeds and less chemicals. The net effect in the net effect is a sustainable reduction in the investments and external inputs. As these days, the investments in the agriculture for a farmer is a cumbersome process. So it is going to help the farmers in reducing his initial investments. Now when we look at the benefits of the DRS technique, right, which is suitable only for mid and heavy texture soils. SIRI type of rice cultivation is suitable for all these things, and different kinds of fertile soils, less fertile soils also. Under SIRI, 2 kg of seeds is required for the initial nursery. See, for example, if this is the plants and this is the nursery, and we then transplant it, right? It needs 2 kg of rice for 1 acre of the plant, but in the SIRI rice of cultivation, earlier it is 5 kg, now with the SIRI, just 2 kg. Now when we look at the limitations, as this is grown without proper tilling at the initial phases, if it is unchecked, greater weed growth will cause substantial loss to the seeds. And in the Punjab, it is not promoted by the government except for the demonstration plots purposes only. That too before 10 years ago. And it can be suitable if organic inputs in the soil structure is maintained. Right? This is about the advantages of system of rice intensification, SIRI. And these are the topics which are important for prelims as well as mains. Whenever you are writing about the answers with respect to the sustainable agriculture, you can use this kind of emerging initiatives. Now let us try to look at the next topic, the service charges levied by the restaurants on the consumers. See guys, you often when you look at the bill, you often find that the CGST is 9%, SGST is 9%, and you also find that service charge is about 10%, right? See, let me show it in the diagram itself. Like we have the image. Here you can clearly observe, see in this image you can clearly observe a service charge of 10%. Often restaurants collects this service charge of 10% from their consumers. And recently central government convened a meeting of all the restaurants owners with respect to the disputes and litigations arising out of this like service charges. The center has called a meeting of the restaurants owners over service charge levied by them on the customers. See, when we look at the components of the food bill, the restaurant bill in India comprises of food charge, right, with the addition of service charges between 5 to 15% and CIS and 5% GST on this amount. This is for all kinds of standalone restaurants. In case of restaurants is located inside a hotel, it is about the GST would be about 18%. What I simply want to say is, apart from the GST, like CGST and SGST, the restaurants also collects about 10 to 15% of the service charges from us. But you need to remember, service charges is not a part of GST regime. Service charge is decided by the restaurant owners itself, and the service charge is imposed by them according to their own wishes, and they are going to collect it from the consumers, right? But it is not a part of service regime, and it is not a part of GST regime. It is not a kind of a tax which is being paid by the restaurant owners to the government. It is not returned by the restaurant owners to the government. Now, when we look at the nature, while the GST is mandatory component as per the law, GST, the service charge is supposed to be optional because it is not mandatory. It is not a part of GST regime. It is equivalent of what is known as gratuity around the world or tip. We usually, when we go to the restaurants, after completion of the dinner, lunch or breakfast, we often give some tip to the bearer. Like it is a similar charge. Like the way in which we give 10, 50 rupees, 20 rupees to the bearer, service charge is a similar thing. It's like a tip. It's like a tip which is already added by the restaurant owner in our bill itself. And after paying the service charge also, we are giving again extra tip to the bearers. But guys, understand, this service charge is not a tax. This thing should be very clear in your mind. The most restaurants devise the service charges on their own. You need to remember these points which are very much important for the prelims, and print it at the bottom of the menu with a, right? Now, restaurants, when we look at this, restaurant stands on the service charges when the meeting is convened. The levy of the service charge by the restaurant is a matter of individual policy to decide if it is to be charged or not. It is not mandatory even for the even for the restaurant owners, they need to provide it or not. There is no illegality in levying such a charge. Guys, understand. It is not mandatory. If they want to impose it, they can impose it. If they don't want to impose it, they can leave it. It is completely voluntary. No illegality. If somebody imposes a service charges, it is not illegal also. It doesn't mean if it is not a part of GST regime, it doesn't mean it is illegal. It is legal. So these points are very much important for your prelims. Once the customer is made aware of such a charge in advance and then decides to place the order, it becomes an agreement between the parties and it is not unfair trade practice. Like you already know that this particular restaurant is going to impose some service charges, and in spite of knowing that you ordered a food, then automatically it means it becomes an agreement between you and the restaurant owners, and it is not a part of unfair trade practice. You are aware. GST is also paid on the said charges to the government. Now, when we look at the issues with the service charge, the issue is almost all restaurants have put service charges as a default billing option fixed at their own accord. It is not according to the government rules. And if the consumer is aware that it is not compulsory and wants to remove or wants the tip to be directly given to the bearer, the onus is on us, on the consumers, to convince the management why we don't want to pay it. See, you are an economic student, you are an aware citizen that service charge is not a part of GST regime, and you don't want to pay that service charges to the restaurant owner, and you want to give that 10% to the bearer directly. Now it is your responsibility to convince it with the management, right? The department says they received several complaints saying it leads to public embarrassment and spoils the dinner experience, since at the end of it they either pay the charge quietly and exit the place feeling cheated, or they have to try hard to get it removed. They need to convince the restaurant owner. Also, there is no transparency as to where these charges goes. The officials also say that collecting service charges on their own and paying GST on it to the government doesn't make it authorized. Right? So this is about the issue that is going on currently with the service charges. So far as the topic is concerned, you need to remember that service charge is not part of GST regime. It is not illegal also. It can be levied by the restaurant owners, and if they don't levy it, it's their wish. Either they can levy it, and once they levy it, it is not to be illegal, because you are an aware citizen. You know that the restaurant is going to impose the service charge, and in spite of knowing that, and you order the food, and it automatically makes that you are party to the agreement that once you receive the food and you eat the food, you need to pay the taxes to the particular restaurant, and you need to pay that service charge to the restaurant owner. Now there is another thing, that there is the other side of the coin, that when you pay this kind of service charges to the restaurant, you don't know whether it is going to be given to that bearer or not. Often the service owners also says that, the restaurant owners also says that this service charge which is collected is also utilized for the welfare of the restaurant, welfare of the particular bar attendants or restaurant attendants. So in such a way, these amounts, there is a dispute between the people as well as the restaurant owners on which how the service charge is levied and that amount collected and how they are utilized. So the thing, this current affair is in transition, and in the newspapers we get to come across these kind of topics frequently, and when the topic again appears in the newspapers, we are going to continue this topic in that particular economic weekly, and this is about so far the current affairs. So I hope in this class you have clearly understood about the GST, the working of the GST, and the important features of the GST. You clearly understood how what is the meaning of VAT, how the value addition is done by the manufacturer to a product, right? How the value addition is done by the manufacturer to the inputs you have taken. So in such a way, the VAT method of tax collection is nothing but the way in which the GST is currently working in the country. You have realized about all these things, and you also know about the system of series price technique, and you now aware about these service charges which is being collected by the restaurants. So this is about some important topics that appeared in the week. Guys, we do have a lot of economic weekly current affairs which appeared in the different newspapers even this week also, and we are going to have a great analysis of all those topics which appeared in this week in the upcoming weekly economic series. So I hope you clearly acquired a lot of knowledge, particularly in this class with respect to the GST, and you also acquired a knowledge with respect to two more important topics, current affairs particularly, which are going on in the country. So this is all for this economic weekly, and we will meet in the next class. We are going to discuss about all the economic current affairs which appeared in different newspapers, particularly in this week. I hope you understood and enjoyed this class.